Hello from the Dukascopy TV studio in Geneva. We're talking about credit opportunities in securities, and we're talking with Mr. Anthony Smouha. He is CEO from Atlanticomnium SA in Geneva. Welcome to the studio.
Thank you.
So, how do you see bond markets developing in the face of rising US interest rates these days?
Right. So it is expected within the next few months that Mrs. Yellen of the Federal Reserve will make a first start to increasing US interest rates. We think this could create some short-term volatility and quite a lot of noise around this. But will this be a turnabout in terms of rates going up? I'm not so sure. I think the European community and the Eurozone and Mr. Draghi will continue with his quantitative easing. So even if rates go up in the United States, and even if there will be volatility in the markets, and a lot written about it, that we will have to live with lower interest rates, lower generic interest rates for a lot longer, because Eurozone interest rates will stay low, and even US interest rates will go up relatively slowly in our view. So this will not be a situation like 1994 where you get one interest rate after the other. It will be a slow process because the velocity of the circulation in the world it will not be so fast. There is commodity price deflation or disinflation, which will remain. I think commodity prices will remain low. The inflation will remain relatively low. Wages will go up, but they will not go up very fast. So my view is lower interest rates for longer, and we have to live with that.
So, but how should one invest with these low or even negative interest rates for bonds?
Yes, it's very tricky to be a bond investor, particularly a classic bond investor at this particular moment. In many bonds, one has negative interest rates. We do not do this. In our area, we have never done this. We have always thought that rates would eventually go up. We always plan for rates going up, even if they go down. We are not betting on generic interest rates. They can go up, they can go down. How do we do this? We invest in bonds and securities which give, if they're a fixed rate, a very good buffer of interest rates, so much higher fixed rate yields. And in order to do that, we have to go into different securities, sometimes undated securities, which give us a high level of fixed rates. And then we have, in case of rising interest rates, floating rate securities, very often, which are deeply discounted. So we are less effective, and we are not correlated with what happens between with the main generic bond markets, and we will avoid bonds which give 1 to 2% coupons for a long period of time, which may appear safe and you will get your money back, but in the meantime, if rates go up, you will have a capital markdown which could be significant.
Do you have a positive view on financial, and if so, why?
Financials is an area where we have been involved for a long time. Now, I should say financials for us is not just the universal banks. We talk about the universal banks, UBS, Credit Suisse, Lloyds, Barclays, and so on. But financials also include some very interesting debt securities of asset managers, such as Aberdeen Asset Management or Man Group. It includes some private banks like EFG International in Switzerland, which is topical at the moment because they are going to be buying back some securities and doing a new transaction at the moment. It includes insurance companies, life insurance companies, property casualty insurance companies, and a lot of these companies now need to strengthen their capital bases. This is very important. This is a regulatory mandate that they have to follow. The governments do not want to have a new crisis where the taxpayer is called to put in money to banks or insurance companies. So they are forcing banks to build up a much stronger capital base to have much less leverage. And this is not a one-year process, it's a multi-year process. And there are all sorts of new regulations which are put in place. And this means that for the subordinated debt, that we're involved in, we're dealing with institutions which over the years become stronger. We want to avoid the weak institutions. We don't do risky institutions in risky countries. But for the strong franchises, for the UBSs, the HSBCs of this world, we think that there are many opportunities to take advantage from marginally higher risk to get a much higher yield.
Mr. Smouha, where do you see the markets in 6 months then?
So at the moment, obviously, and there are always different risks that are there. We have and we're facing two risks in the European ambit. One is very topical, is the Greece situation. And our basic case is that one way or another, the Greece situation will be resolved and the Greece will remain in the Eurozone. They will keep the euro and they will come to some form of negotiation. If they were to leave the Eurozone, in our view, it would not be good, and I think most politicians understand that. We do not think it would derail, for our securities, the financial improvements that would take place in the rest of Europe, but it would create a lot of short-term volatility and some existential risks in Europe. So I do believe that people, as Mr. Juncker will say, this is not a scenario which is to be envisaged. One way or the other, they will come to a solution. The second area of risk in Europe is obviously the eastern side, which is Russia and Ukraine, which that will have an impact if it continues in a bad way to the economic growth in Europe and the regeneration of economic growth. Again, I don't think that will derail a recovery, but it is obviously better, even if sanctions are renewed on the Russians, it's obviously better if that situation reaches some form of stability. We talked about the higher interest rates. That's another a level of volatility and risk. Other than that, I think the world is in not such a bad place. The quantitative easing in Europe will create some level of growth. There's growth in the United States. China is slowing down, but that takes the pressure off commodity prices, and it's a restructuring and reforming of the economy that is taking place. And if one watches, strangely, the Chinese stock market, one sees that effectively there is some discounting of the improvements and the reforms that are taking place in the results, the tremendous results of the China stock market. And Asia is growing. These countries will not stand still. So effectively, we're living to some extent in a Goldilocks environment, not too hot, not too cold. And so for our business, we will continue to buy the bond opportunities that we see. We continue to find bonds of very good companies. Lloyds Bank, we bought some old-style bonds today, giving nearly 6% yield. We think these are very good returns, and there's room for some capital gain in some of the bonds that we're buying. And some of the new issues that come out, we also feel are attractive. And recently we participated locally in a very interesting issue for the local company Trafigura, which is a very strong franchise in the commodity business, and they came with a bond paying a coupon of 5% for 5 years as senior debt. So there will always be opportunities. We'll take advantage of these opportunities. So we see the next 6 months in a positive way, as the first three, but the first 3 months have, of course, been very good so far.
Mr. Anthony Smouha, thank you very much for being here today and sharing this information with us.
Thank you very much.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.